I made $14,000 day trading futures today using small account trading strategies, and I'm going to show you how in this video. We're going to do a full trade breakdown, and I'm going to give you an explanation of how is it that you can make such a large amount of money using trading strategies that are applicable to small accounts. You guys love these trade breakdowns, so I try to do them every chance that I get. Let's get right into it. And yes, I'm in New York. Follow me on IG and Twitter if you want to see my travel journey. And yeah, the grind doesn't stop. Even though we're out here, we're still live streaming with the team every day. Let's go. All right, traders. Now, before I break this trade down, I just want to explain why trade copying is so advantageous to those of you who have small accounts, because it is still small account trading, but you're able to increase your leverage exponentially if you are trading with discipline. So here's what I mean by this. And I did a full tutorial, by the way, on how to copy your trades here. It's a full tutorial from A to Z, whether you're using a PC or a Mac. So if you're interested in doing this, check it out. You certainly don't need to copy trades to make money in a small account still. But in this case, let me explain this to you. So the reason that I like to copy trades, because I get this question all the time, why don't you just trade your personal funds? I do trade my personal funds, but this opens the door to exponential leverage. I don't have to have a monster day to have a monster day. I can essentially have a solid disciplined trade for a few $100s. And once you copy that across, in this case, 21 accounts, $670 is $14,000 on the day. All I need to have is a small disciplined trade. I don't need to go super heavy. Plus, the initial investment, right? The initial cost of acquiring these accounts versus using my own money, right, is vastly different. It didn't cost me a lot to get these accounts. As a matter of fact, I picked up these accounts on the Apex 90% sale, which might be going on as of the time of this recording. So you'll either see an 80% or 90% sale if you use the link in the description. The cost of acquiring these accounts were less than $20 each, right? If I were to try to replicate this leverage with my own personal account, it no longer becomes a small account scenario. I would need to trade my large account and put up 20 to 40 contracts, which for each NQ contract can be $20,000 of leverage if you're trading on a traditional brokerage. That is just a ton of money. It no longer becomes, what can I do with a small account? It is this type of trading is only reserved for someone who has an enormous account, right? So you can still replicate the results of a large account while keeping your initial investment low. And if you are responsible and you know how to stick to your rules, you can exponentially make a ton of gains on a daily basis. So let me break down the trade for you that I took on the live stream. This is going to include a lot of SMC/ICT concepts. I'm not a pure ICT trader, but I do use a lot of the concepts in my trades, especially the concepts surrounding macro times, liquidity, as well as key levels such as London, Asia, highs and lows. Let me explain the trade. And if you're interested in fast tracking your trading and learning this stuff, make sure that you sign up to the next mastermind waitlist. We start a new live mastermind taught by me every single month. So make sure that you put your name on the waitlist below if you want to join the next one. Let's get right into it. Now, as I said, I took this trade on the live stream this morning. So every single morning I mark out where were London highs and lows, where were Asia highs and lows. And here we had London high. So I saw that we had a consolidation overnight, right before the New York session, and we took London high. This right here is a liquidity sweep. So we took London high and we essentially dropped. However, the next question that I try to answer is, what is the draw on liquidity? Meaning, did we take out liquidity from this is what we call sell side, which is basically support, or if you're a supply and demand trader, demand, right? Did we take liquidity on the demand side, or does the market want to draw for more liquidity? So what do we use in order to get clues about whether we took liquidity or not, and whether we are going to revisit this level? Well, for one, NQ created equal lows. And what we do know from our liquidity concepts, equal lows and highs tend to get revisited and breached. Another thing I like to do is check for regular trading hours, RTH, right? So because futures trade 23 hours a day, you have what is called an RTH gap between the close, right? The close of the previous day and the opening of the following day. Now, when we say close and opening, we're talking about 4 p.m. New York time the previous day and 9:30 a.m. New York time the next day. But like I said, futures trade 23 hours a day. So there is an RTH, which doesn't take into account the overnight trading. And then there's ETH, which is electronic trading hours, which takes into account the overnight trading. So I try to see if there is a gap, because what we tend to see with futures a lot of times is if that RTH gap is nearby, then price will go ahead and fill it before making the next draw on liquidity. Now, NQ didn't have an RTH gap. It traded almost continuously overnight. So then I switched to ES, which is the S&P 500. Why do I do that? Because these two indices are inextricably tied. One can give you clues about the other. So when I switch to the S&P 500, I see that we have an RTH gap here, right? And again, this is 4:10 p.m. the previous day. This is 9:30 a.m. today. And we have this gap here. So after sweeping London high, my thesis was that ES would actually come here and fulfill this RTH gap. This would also allow NQ to come down here and sweep these lows. So in a nutshell, I thought there was more liquidity to be had down there. I just had to figure out from where is price going to attack this liquidity here, right? The number one question that I try to answer every day is, where is price going to and where is it coming from? So now that I have my thesis that we're going to draw for more liquidity down there, what I see here is we have what is called a fair value gap. Now, there are a ton of free tutorials online if you wanted to learn all about fair value gaps and ICT, so I'm not going to jump into it in full detail, but a fair value gap is basically an imbalance in the market, right? Where you have a disagreement between buyers and sellers, and you see this extreme selling pressure creating this gap that is constructed with these three bars here, right? So this right here is a bearish fair value gap. You also have what is called a breaker block, because we had a high, a low, a higher high, and a lower low. So when we come back here and we retest this area, we are retesting an area of confluence. You have VWAP, if you use that. We have a bearish breaker. We have a fair value gap. And in addition, for those of you slightly more advanced traders, we have an inverted fair value gap as well. So this is all the confluence I need to be able to take a trade from here with the thesis that we're going down here. Now, can I be wrong? Yes. But the point of trading is not to be right 100% of the time. It's to be right more times than you are wrong. And when you are right, you win more money than the times that you lose, right? That's really all trading is about. So setting my stop limit here, targeting this area, we could see that we have a nice way more than 2-to-1 if we were targeting that area. We only need one contract because this would pay, a hefty sum. Like I said, $670, $680 copied over 21 accounts is more than enough. Now, why did I set my stop limit here? Because it's the top of this candle here that created this fair value gap. It's the top of this candle's wick right here. So essentially it's a 12.5 point stop and a 38 point TP. This gives you a ratio of 3-to-1. This is a type of trade that fits my risk tolerance, my style, and my strategy. And as you can see, price draws into that area of confluence. Again, VWAP, fair value gap, inverted gap, and breaker block, and comes down here to our level. Now, we didn't take out equal lows here, but if you pay attention to ES, you can see that that move not only swept equal lows on ES, but if I switch to RTH, the regular trading hours, you could see that it also filled that RTH on ES, and that's all we need. I don't really need NQ. I'm not going to sit here and stubbornly wait for NQ to tick exactly below those equal lows. Now, one other concept that's important to highlight is the concept of macros. These are basically algorithms that run during certain times in the market. Now, it's not going to tell you whether the market is going to go up or down, but if you find a setup and it happens to fall in line with these time windows, I'll flash them on the screen here. It happens to fall in line with these time windows, then that algorithm that runs during that time can actually take your trade, if your setup is correct or if your thesis is correct, can actually take your trade to the levels that you are eyeing. But basically during these timeframes, you can backtest this, but during these timeframes, you will see price running. Now, obviously you could be wrong and price could run against you, which is also a possibility. But all I'm saying is the volume of futures is usually the most active during these timeframes. So if you find a setup and it is during these timeframes and it is A plus, or at least has all of the confluences that you were looking for, then there's a higher chance of it working out during these timeframes as opposed to you getting chopped to death. So in this quick little video, you learned about trade copying. Go watch this video here if you want to learn how to copy your trades. Make sure you hit up the Apex link below to get your accounts for 80 to 90% off. You learned briefly about London highs and lows and Asia highs and lows. You learned about RTH, and you learned about breakers, fair value gaps, and inverted fair value gaps. Now, as I said, this isn't a detailed tutorial on each of these things. You can either join the waitlist for the mastermind below, or join us in the Discord below because we talk about these things every single day and it is a much friendlier price point. Or you can Google or YouTube this stuff on your own for free. Anyway, traders, that is how to grow your small account or your small investment using futures trading. If you have any questions or comments, leave it down below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.